tax shouldn't be a surprise.
Okay.
And the more specific you can plan around it, the easier it will be for you to prepare. Okay, so every year you should get in touch with your accountant in March and just ask them, can you help me plan my tax? And they might not be able to do anything for you because of your situation, but at least you know what's coming. What we need to do is establish how much you think you're going to earn over the course of a financial year. And then we can plan some scenarios around how you can actually improve your tax position. Do you know your earnings from the past 10 months?
No, we're talking revenue, we're talking income, like profit. What are we talking about?
We can split it into your revenue.
Yes.
How much revenue did you make so far? And how much did it cost you? So how much was your direct cost? And how much were your overheads? So you can split it out because that makes it a little bit easier to project the next 2 months.
So look, we're currently sitting 10 months in at about 750K, like somewhere between around that. And I'm projecting that we'll hit $1 million in revenue for the year.
$1 million.
That bottom line on the zero statement says we're doing about 15% net.
What do you already have booked in, and what are you projecting that you can actually hit revenue-wise in the next 2 months?
Probably another 250K will come in, bringing us up to that $1 million year.
Did anything change? Did you change any of the services you deliver, or is it the same services? Are your margins pretty similar?
Most things for me in this situation have stayed the same.
And you haven't hired or are planning on hiring?
So we have added one more staff member over the course of the last 10 months.
And they have already been included in the wages, so the wages will stay the same?
Yes.
Okay. The next thing is, has anything changed in your overheads? Have you signed up to anything new? Will you have any larger outgoings? Anything that we can't go off the last 10 months for? So is there going to be a large insurance payment coming out or anything like that you know of?
I'm looking at getting another car in the next, so upgrading my current ride in next month, which will mean that I've got an insurance payment that might change next month.
Do you need this car for your business?
Oh, definitely. I definitely need a Ford Raptor.
Who doesn't want a Ford Raptor? Based on those numbers now, when you do tax planning, we can project your profit for the whole year. If your tax rate is in a company in Australia, it will be 25%, that's going to be a tax bill. With that information, your accountant can now give you different scenarios on if you do this, the tax bill will lower. It's really good to just be aware of what's coming as well. And especially if you're looking at buying an asset, it might be worth waiting until next financial year. If you're continuing to grow, you might need additional tax deductions then because you're adding a lot of revenue. You might have a big project come up. So potentially it's in your best interest to pay a little bit more tax this year to then have an extra deduction next year if you're looking at buying that car anyway. If your accountant knows these things, they can advise you on the best timing of that purchase of that asset. Tax planning now gives you the ability to say, okay, next year in March, I'm going to have a $25,000 tax bill. And if you don't have that money in the bank right now, you've got 9 months to save up for it. So now you can actually prepare for that bill, and it's not going to hit you in the face like a shock and you never knew about it. Tax shouldn't be a surprise. And the more specific you can plan around it, the easier it will be for you to prepare.